Okay guys, last video, but this one's probably the most important one. I've noticed that a lot of you guys don't quite understand the difference between like the accounting equation, when like the detailed accounting equation and the branched out accounting equation. So I'm going to show you what I mean by each one so that you know what I'm talking about first. First, there's going to be your assets equals your liabilities plus your owner's equity. But you get your owner's equity by doing this, right? You have your retained earnings, and then you have your capital contributions. But you get retained earnings with your net income and your dividends. And then how do you get your net income? That is your revenue minus your expenses. So this is the branched out equations, but the equation looks a little different, and that's where the confusion is stemming from. So the equation looks like A equals L plus, here we go. Whew. Beginning retained earnings plus revenue minus expenses, because that is your net income, minus your dividends plus your contributed capital. So there's a few things here that I wanted to review because you guys might have noticed on your quiz questions that you are sometimes asked for beginning retained earnings, ending retained earnings, or change in retained earnings. And change in retained earnings is just this. It's gonna be right there. You don't have to do anything yet, but it's just gonna be your net income minus your dividends. You're not going and including your beginning retained earnings yet or your contributed capital. And this equation makes a little more sense to students sometimes because this retained earnings contains a lot more than it looks like. It's actually, so your net income minus your dividends right here, that equals your change in retained earnings. But to find your owner's equity, you actually need your beginning retained earnings plus your change in retained earnings. And that's how you're going to get your ending retained earnings. And then you take your ending retained earnings plus your contributed capital, and that's your owner's equity. And so like this equation gives you a really good idea, the branching out gives you a really good idea of what comes from what, but it doesn't give you a good idea of what the like various REs are coming from or kind of where they go, things like that, which is why sometimes I prefer this. Because, here we go, just to rewrite this a little closer, revenue minus expenses is your net income. Revenue minus expenses minus your dividends. This bracket situation here, that's your change in RE. And then your beginning retained earnings to here, the end of your change. That's going to be your ending retained earnings. And then finally, everything here, that's your owner's equity. I hope that makes a little more sense. If not, definitely reach out to me. But as I said, this is a very simplified way right here with the branches. And I would mostly use it as a rough sketch of what owner's equity turns into. Like, it's really important, for example, to remember that contributed capital doesn't come into play until owner's equity. I don't care about what the owner puts into the company until owner's equity, because retained earnings is all about how the company is operating, what they're giving their shareholders, things like that. And that's why we care about retained earnings here, because retained earnings comes from net income and our dividends, which tells us our revenues minus expenses, aka how much did we make, and then how much did we spend, minus how much did we give out to people who invested in us, our stockholders, and that's retained earnings. Retained earnings shows how our company is performing. That's really important to us, and sometimes they're just going to ask for retained earnings for that reason. Sometimes they don't really care about what I'm putting into my own company. That's contributed capital. That's the very last step. If they ask for your ending owner's equity, definitely include it. But I would note that on your quizzes, they did ask for a variety of retained earnings. But a lot of you wanted to throw contributed capital in there, and it just wasn't needed. So definitely keep this straight. I would say that there's a lot of value, kind of, I guess I would almost call it like the aloe tree, like the accounting equation branched out, something like that. But this equation is really going to help you in the end. Obviously, your assets and liabilities are pretty straightforward, but as I said, owner's equity can get complicated. Just to quickly review it one more time, the very center of this equation, you have net income, which is revenue minus expenses. I have no doubt that all of you can solve for that. The only thing that might trip you up is prepaid expenses. It's an asset. It has nothing to do with your expenses in net income. Don't worry about it when you're worried about the income statement. Only worry about prepaid expenses on the balance sheet. So if I'm in the income statement, I'm going to worry about my sales and then all my expenses. That finds me net income. Then, if I want to find my change in retained earnings, I'm going to subtract my dividends, which is what I'm going to give out to people who own my stock. That gives me what the change was in retained earnings this year. But if they ask for beginning or end of retained earnings, it's important that I use my information that I have and either say, okay, so I have the change in retained earnings and maybe the ending retained earnings, but now I need to solve for my X here. So for example, if I'm solving for X, I would subtract my change in RE over to the end RE and find beginning. If I'm trying to find end, then I would just add beginning RE with the change in RE and then find ending retained earnings. Finally, if I'm not even worried about really retained earnings, if they're asking about the end owner's equity, that's where I'm going to take my final retained earnings, the end retained earnings, plus contributed capital, what I'm putting into my company as an owner, and that is my owner's equity. So I know that was a little repetitive, but really just wanted to drill that into your brains. Feel free to rewatch it or skip parts as much as you want. So